A very good afternoon, and I want to say happy Easters. It is a delight to have you join us on Market View with me, Sifiso Nxumalo, and as always, I will ask that you stay with me over the next half an hour as we look at developments that are happening around the nation's economy and how they feed into the overall sustainable economic growth of the country. Today, the governor of the Central Bank of Eswatini, Dr. Philip Mnisi, has delivered his monetary policy statement, and part of what the statement articulates is a discount rate that is unchanged as it remains at 7.5%. It was a 7.5% even on the previous month. We do want to delve into that with Sibia, our economist, Mr. Sanele Sibia, who is our economist. We want to look at how that feeds into today's financial markets of the day as we delve into the analysis of today. Still with Sanele Sibia, but for now, let's start the show with today's business news. Welcome back. On our first story, Nedbank Eswatini's headline earnings increased by 10% in the last financial year, which is 2023, when compared to the previous year. Now, releasing the end-of-year financial results on Wednesday morning, the managing director, Fikile Nkosi, said the bank delivered headline earnings of 178 million.
We are coming with 2023 results for financial results for the bank at the back of a very challenging year, which was characterized by a slow recovery than expected of COVID-19 by the companies, but by the economy as large, but also the global impact of the Ukraine-Russia war that impacted consumer prices and also impacted on the entire value chain on our inputs as a country. You will also appreciate that the country is a net importer of goods and services, therefore impacted by high rates coming from the supply chain, as it were. As you can actually see that the rates were high, inflation was high. This impacted our clients negatively with their disposable income shrinking drastically, but also the affordability going down, thus them not being able to pay for their loans that they've taken from the bank. This saw us coming back with results that are impressive, notwithstanding this position, recording an increase year-on-year of 10% from prior year 2022 to 178 million emalangani profit after tax. But also we have seen the return on equity sitting at 17%, a very impressive double-digit growth that has increased from prior year by 100 basis points as well. It means the shareholder has actually benefited from the returns of this year, the results of 2023. We've also got the key ratios that are driving the bank. The capital adequacy ratio, it's very key for the bank to manage its capital to ensure its sustainability. We are happy to report that the capital adequacy ratio was sitting at 18.04%, which is still within the statutory requirements, that is the legislative requirement, but also within the policies of the bank.
Nedbank has also committed to support local small and medium enterprises despite them struggling to service their debts last financial year. Now, this was said by the Managing Director, Fikile Nkosi, during the release of the end-of-year financial results.
We do look at alternative ways of assisting our SMEs in accessing our finance through the government guarantee schemes that are there, be it the export guarantee scheme or the small scales guarantee scheme. We are trying also to ensure that we work with government in ensuring that if they get the tenders, it's more like your bridging finance, working capital, to fund those government tenders they've come up with. But there's a lot of work that needs to happen in that space to ensure that government does pay on time our SMEs. But on the SME side, what is also critical as well is the awareness that they've got to keep their books, they've got their records updated. There is a relaxation that we have spoken about, that we no longer require your audited financials. We just need your management accounts just to give us the assurance that you are actually taking your business seriously, recording everything that is happening within the business. And it also gives us a sense of where, at what level do we actually land you. But as well as the fact that we are able to journey through with our clients, particularly if we've seen that playing itself. We've demonstrated this very well during the COVID era, where we've given them restructures, we've given them payment holidays, and that we still do it on a one-on-one basis, basically.
Let's go for a net break. We speak to Sanele Sibia, our economist. We connect with him virtually to discuss the Central Bank of Eswatini, Dr. Philip Nisti, the governor's monetary policy statement.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
sabadala ukuthi njengalokhu sivile sive sikhulume
Welcome back. The Central Bank of Eswatini has maintained the discount rate unchanged at 7.5%. Now, this was said by the governor, Dr. Philip Nisti, when delivering the monetary policy statement for the past 2 months.
Decided to maintain the discount rate unchanged at 7.5%. The bank believes that the current policy stance is appropriate to continue to support growth-friendly economic conditions in the kingdom. The bank expects the commercial banks to maintain the current prime lending rate of 11%. Global economic growth remains benign, and inflation for selected advanced economies is sticky but trending downwards. The same applies for some economies in the region, especially South Africa, which is Eswatini's largest trading partner. Latest published inflation in South Africa is 5.6%, which is 1.1% above the midpoint of the sub-target range of 3 to 6%. Economic conditions in the country remain robust, with growth on a year-on-year basis at 7.7% in the third quarter of 2023, and forecasted growth at 4.8% and 4.9% for the 2023 and 2024 respectively. selected economic indicators show that growth may remain resilient over the medium term, with key infrastructure projects contributing positively. Inflation is at 4.3% in February 2024, down from 4.5% in January 2024. The bank has also noted credit extension on a growth path, but remains concerned with the level of non-performing loans, especially in the household sector. The bank is concerned with the level of reserves, currently at 2.3 months of import cover. The higher SACU receipts and targeted strategic initiatives by the bank are expected to boost the level of reserves going forward. Over the short term to medium term, the bank sees inflation forecasted at 4.9% for the year 2024. Over the same period, the bank notes that the Minister for Finance has committed to bringing fiscal policy to a balance. The estimated deficit for 2023-2024 financial year of 1.8% is commendable. The bank further notes the contained level of total public debt to GDP. Currently, public debt is at 37.2% of GDP at the end of February 2024. Overall, the economic conditions for the country look promising. The bank will, however, continue to monitor developments and data to inform its policy stance as normal course.
That is the Central Bank of Eswatini's Governor, Dr. Philip Nisi. Lo tsinza kakhulu some of the key factors that affected our monetary policy statement, Mr. Sbiya. As I welcome you virtually to the program, perhaps if you could explain to us what it informs us really, what the governor is saying, particularly regarding the fact that after consulting the MPCC, they have decided to maintain the discount rate unchanged at 7.50%. What does that tell us?
Thank you, Mr. Ngumalo, for having me. So what that tells us in the kingdom at large, the central bank, it's an conditions like I influence how the bank should actually respond, mostly to try and curtail inflation. Lama conditions singayenyusa noma siyehlise le interest rate yethu lapha even. Loko kusho ukuthi nangabe central bank has maintained the discount rate or the repo rate at 7.5%, and that means nemabhange are expected to maintain the prime lending rate, which means wonke umuntu lo probably loneskwelede or loneskwelede lesi prime linked, then they are not going to see any changes in their monthly installments in terms of lama payments that they have to make to the bank.
He also alludes to the fact that they believe, at least as the central bank, that this policy stance is appropriate, at least to continue to support growth-friendly economic conditions in the country.
Yes, Mr. Ngumalo, you have to understand that managing the economy is what we call a balancing act. There really isn't much science behind it. So what the central bank has to try and balance is manage the risks of inflation and any other risks that we are seeing in the domestic economy and in the international economy, and juxtapose that with what has to happen domestically. So we do believe as economists that maintaining the interest rate at the levels at which it is at in the present moment, it will actually spur growth in the short to medium term. So it's not going to have those much negative impacts. But as the governor did note that there is an increase in the rate of non-performing loans. So this basically tells us that the interest rate is still a bit too high. But ngoba kusafuna sibuke lama conditions in the global markets and in the domestic markets, sibona ukuthi ingabe sekayasivumela ngokuthi singayehlisa silive ngoba that is one of the things that we need to look out for. My business in our own Eswatini, they need to be able to honor their obligations. So the fact that we are seeing that increase in the non-performing loan portfolio, means that the interest rate is a bit high, and the nation at large is still looking forward to when they begin to subside and come down.
Something else that he mentioned worth, delving deep into is the fact that global economic growth does remain benign. I mean, it remains friendly. I guess that's what it means. But inflation for selected advanced economies is sticky, but trending downwards. What does he mean by it is sticky?
It is sticky, yeah. So what we are seeing here is both in almost all advanced economies, I think, with the exception of Germany and China, we are seeing positive growth, and there is that robust performance of those economies in terms of their growth numbers, which we then expect to spill over into the global south. But what we are seeing with inflation is, if you look in the Eurozone, but we're expecting the figures to come up tomorrow, the inflation is going down. The rate at which prices are increasing is actually going down. If you look at the UK, they are now right about at 3.6%, away from 4%. So that means the rate at which prices are increasing is not really responding as well as one would have expected. That is what one means when it's saying it's sticky. It is going down, but not at the rate at which we expect it to go down.
Interesting. He also alludes to the fact that it also applies for some economies in the region, but especially South Africa, which is Eswatini's largest trading partner. I guess that's good for trade, isn't it?
So when you look at the South African issue, is the inflation that side actually from January to February, it increased from 5.3% to right about 5.6%. So that's a risk that we need to manage as a country, and considering that we are part of the CMA, or the Common Monetary Area, where we are highly linked in terms of our currency and in terms of our monetary policy, we have to move as a unit in all four countries. So now when we are seeing those risks in South Africa, that means we might actually import that risk to Eswatini. So one of the things that really called the country to really try to maintain the interest rate so that we are somehow insulated from the risks in South Africa. So yeah, we are seeing that upswing and downswing in the inflation in South Africa, but purely because of it's inflation, it's an election year. So there tends to be much spending going just to try to influence the elections by the different parties.
It's quite interesting. I wonder what it is really that the South African economy is not doing right, which has resulted to the inflation growing or inflating really in South Africa, because I think that the governor did say that ours is down. I think it was from, it's at 4.3% right now, which was 4.5% in January.
Yes. So when you look at the conditions in South Africa, the issue of load shedding still remains one of the risks that the economy faces. And then we have also seen the issues to do with logistics, where Transnet has been grinding to a halt. We've seen that happening in the ports. We have seen that now spilling over into the rail lines, and then we are also seeing that SAA, which is South African Airlines, now is also not doing well. So what we are seeing as the major factor that is downplaying the South African economy is basically the performance of state-owned enterprises. That side, we are really hoping that there is going to be a turnaround so that we are able to see the growth that South Africa has the potential to attain in the region.
Yeah, the issue of electricity in South Africa has been a thorn for a long time, and it makes me wonder because, yes, the governor is saying that there are selected economic indicators that show that growth may remain resilient, lapha ekhaya, over at least the medium term, with key infrastructure projects contributing positively, even though sivuke namhla ekuseni with some headlines that are concerning in some of our biggest infrastructure projects. Nganankana lesayisuke 200,000 say costa million. I think we should do better there, but I'm just wondering kulama key infrastructure projects that should contribute positively to our economy, kuthi engabe indzaba baba yetfu yagesi kusinforma ini nakulokwenteka in South Africa with their greed and their energy sector. What does that really inform us with our current energy projects?
As you know, Mr. Ngumalo, as you may know, and as the nation may know, that we are importing close to 78% of our electricity from South Africa. And one of the major risks that we are looking into going forward into 2025 next year is the fact that our import contract with South Africa actually expires. It comes to an end, it comes to term. So that means we have that 78% deficit in our energy grid that we might have to find alternative ways of sustaining if South Africa decides to cut down on them on their exports to Eswatini. So that is one of the major issues that we are looking at, and we are trying to see how they are going to play, because electricity is actually the backbone of production in this economy, in the economy. So what we are hoping to see right now, what we are monitoring is how will the issue of load shedding play into this current election cycle in South Africa. As you know, that the party that promises to do better in terms of load shedding might actually be the party that wins the seat. So if we get a party that is not real, that is going to say, no, let's be insular with our electricity, then Eswatini is actually in big trouble. And that's why we applaud and laud the efforts of the energy regulator in the country to try and really open up the space and ensure that independent power producers are able to sustain the grid. And then also we are seeing improvements in the infrastructure with the hydropower station that is being developed in the country. So that's actually going to show up our domestic electricity production. And yeah, so that's one of the things that we really need to ensure that we expedite as a country, and we need to ensure that we are able to manage that risk in terms of electricity so that it has started by surprise.
Indeed, Mr. Sbiya, that surely should be one of the projects that we do expedite, in making sure that it is being realized. His Majesty also did give a big responsibility to the 12th Parliament, umavula iParliament, ukuthi asikugijime ngankwe ukuthi salo sithi khichitela gesi wethu. Mr. Sbiya, ngiyathi ukuthi awuyinzawa sibahlala emarket masinyane ungahamba yona themandi nawe ngoba sitawubuka timali lomuhla market analysis yethu ukuthi ngabe na monetary policy statement ya Dr. Governor Mnisi is informa kanjani yona financial outlook of the day.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Welcome back to the program. We just discussed the monetary policy statement, which is being officially delivered today by Dr. Philip Mnisi, the central bank governor, to Eswatini. It is not yet out, but he has delivered it. The official document itself is not yet out. We are just, going through some of the things that he mentioned when he was presenting the statement. We have already, discussed that with Mr. Sbiya. But the question now is how to all those key indicators that he spoke to affect today's financial analysis. Mr. Sbiya, welcome back to the program. You join us virtually once again. The inflation, decreasing the prime lending rate, everything that really we have discussed. How does it affect today's forex?
So in terms of forex, you can see that the langeni to the dollar and the langeni to the euro somehow is actually at a weaker position compared to when we started the week. We are now in that 19 region and 2054 in terms of the dollar. So what we are seeing there is The markets are trying to rebase and trying to really look forward into all of this. Yes, we are seeing good news in the kingdom, and we are expecting good news in the Republic of South Africa, because we are also expecting them to maintain the interest rate that side. But then that also happens on the backdrop of when you look in the US and then you look in the UK, the interest rates have been maintained there, and we are seeing that same thing. We expect the European Central Bank to do the same tomorrow. So all of those things then make the advanced currencies to be a bit stronger, because they're anticipating a stagnation in terms of the interest rate and just keeping it there. So that's what we are seeing. But when you juxtapose that with the Japanese yen, you will see that we have actually gained a few points against the yen. So that is actually in the backdrop of, we have seen when the Central Bank of Japan actually increased the interest rate. No, they came from a negative interest rate territory in the past. I think they've been running it for the past 2 decades, and then now they're coming into positive territory. So, however, the markets have not really responded pretty well to that in terms of the forex, because the yen has actually lost much value against all major currencies, including the Lilangenes. But we are still waiting to see how the Bank of Japan is actually going to. They did say they are not afraid to come in and buy this excess forex, so that they keep the interest, that they keep the stability of the yen at levels that are quite favorable.
All right, fair enough. Let us get into commodities. I want us to look at Brent crude. We did see yesterday that oil prices fell for the second consecutive day, and we heard that it was due to reports of increased crude stockpiles in the United States. Is it still the same situation today as yesterday?
Somehow it is still the same situation, but it's still wary, because we are still above the 85.85 dollars per barrel. That's when you look at Brent crude oil. But when you look at the US crude oil, you'll see that that one is now right about in the region of 80, going back into the 70 region. So what we are seeing in the short to medium term is, yes, those increasing stockpiles in the US have not yet started affecting the entire market in its entirety. So yeah, because still we are waiting on OPEC countries to also start increasing their output, and then we might likely see that Brent crude will actually come down in the short to medium term.
Okay, let's talk about gold. Gold prices were flat in trade yesterday, and the dollar ticked higher. With cautious investors awaiting more cues on the U.S. And some people are still speaking to the fact that they are waiting on the investors are waiting rather for the release of the Fed's preferred inflation gauge, which is going to be out tomorrow. Lingabe lo muhla kume kanjani? Solo sisamelelo Friday anyway.
Yeah, I know the entire world is looking into Friday. And if you recall, our MPC was supposed to actually come out tomorrow, but it then was moved up to today. So what we are seeing there is, yes, the markets are waiting to see employment data coming out. They're waiting to see CPA data coming out, and then they're also waiting to see consumer confidence or consumer sentiments data coming out. So all that data we're waiting to see tomorrow. So what we are seeing is that positive movement in terms of gold, because the market are a bit uneasy. They do not know what to expect, and considering that it will be a long weekend. So that is why we are seeing gold doing fairly better today at $2,225 dollars per ounce. So that's what we are looking forward to. So there's still that hedging mentality in the markets moving towards gold, but then you will see when we get to markets that markets are also faring better, but that is actually in the backdrop of certain companies doing better.
Let's get into equities real quick. We are running against time now. U.S. stocks slipped on Tuesday, but that was according to investors awaited economic data in a holiday-shortened week to gauge the Federal Reserve against interest rate policy path. The focus remained on a key reading on the personal consumption expenditures price index. Ngabe lo muhla let nombolo tisi informa kuthini. The data is due on Friday. We're still waiting for Friday.
Yes, no, waiting for Friday. What we are seeing in the US is all major indices closed on the green yesterday. So that means they closed better than they did the previous day. But what we are seeing is markets are still trying to go back to the highs that were recorded before the market sell out, before the major CEO started selling their stocks. So that's what we are seeing at the present moment. But we are realizing gains in terms of certain companies with an expectation of better confidence from consumers, and with expectations of improving or of a declining CPI data that's going to come out probably tomorrow. We saw stocks like Tesla doing very much better. Apple also performed better, and then there's also some pharmaceuticals also trying to move up in the ladder. So what we are seeing is that overall growth in the market is basically driven by said a few
but he was talking to equities, but he was alluding to the fact that big tech's resilience and concentration is a key contributor to the performance of that index. That's the end of our market view for the week. We'll see you again next week. Have a happy and a good Friday, happy Easter weekend, and depart and be responsible. Bye-bye.